South African IPO Resurgence to Revitalize Johannesburg Stock Exchange. Anticipation is building within South African financial circles as JP Morgan Chase signals a wave of initial public offerings, IPOs, expected to energize the Johannesburg Stock Exchange, JSE, from as early as next year. This forecast taps into optimism fueled by a more favorable economic environment following a pivotal election, suggesting that the continent's most significant economy is rounding a significant corner. The shift in political landscape has catalyzed an influx of multinational investment, stimulating the rand and bolstering the bonds market. Notably, there has been a more than 20% appreciation in the benchmark stock index since June, when measured in dollar terms. A lucrative turn of events, considering the consistently moderate growth rates the South African economy has experienced over the past decade. Now, with the African National Congress, ANC, losing its majority for the first time since 1994, a sense of a fresh, pro-business approach has taken root, according to Edward Bell, a managing director at JP Morgan's Johannesburg office. With investor sentiment veering positively, the JSE is prepping for an influx of action, headlined by an impending IPO of Pick n Pay's Boxer unit, expected before the year's close. In what could be a watershed moment for market activities in South Africa, there's a buzz around Anglo American's proposed subdivision for its platinum and diamond businesses. Other notable prospects include an anticipatory $8 billion valuation for Coca-Cola's African bottling venture scheduled for 2025. Notably, the JSE has been proactively courting inward and secondary listings, strategizing to leverage connections with businesses rooted in Africa or sub-Saharan regions. Bell underscores a marked shift in the narrative around South African firms, with renewed interest palpable among research teams and sales trading teams throughout the industry. In addition to IPOs, the debt issuance market across sub-Saharan Africa is likely to witness increased action, banking on the region's promising yield and currently stable economic prognosis. As sectors such as banking outperform expectations, with major players like FirstRand, Standard Bank, and Capitec experiencing stock surges in excess of 25% since mid-year, the market is readjusting its lenses to focus on domestically oriented equities once again. With a projected GDP growth of 1% this year and an anticipation of 1.4% by 2025, after a sluggish decade of sub-1% growth, South Africa's economic upswing signifies a beacon of hope to local and international investors alike. This is despite a net selling of $5.5 billion in South African stocks by foreign entities this year. The financial sector, in particular, is capturing the limelight as a cornerstone for economic optimism. Thank you for choosing Satori News.